How do all of you invest your money?
How do all of you invest or reinvest your money besides your business? Stocks, bonds, mutual funds. I've been stacking gold and silver for a while now. Been in and out of the stock market, but I'm currently reading every book about investing or finance that I can get my hands on before re-entering. Which stocks did you hold on to? I'm actually doing crazy research as well. I'm 25 and feel like I'm late into the whole investing deal. What do you do for a living if one addict? There was another thread recently where I talked about being a full-time day trader. I chose to take that cash and invest in myself and ideas, because the potential is so much higher. When you really get into stocks, you realize it's not actual investing at all. It's pure speculation. It's pretty rare to hear about a stock trader who went from $30,000 to millions. Theoretically you could do it in a matter of days, it's just really hard work. But unlike real work, there's no utility that you're bringing to the table. Nothing to brag about, haha, mostly just luck. I was 18, without the slightest of knowledge. I got into IRBT, Apple, Bell in the summer of 2010 and sold everything last summer. Made some awesome profits. But looking back and even writing this response, I realize how lucky and foolish it was to just buy with no research. Was fortunate enough to inherit some gold that started my precious metals stack that I continue to grow. I mainly help run my dad's security company and am going to school for finance and spending every free hour learning the market. There's plenty of brilliant members on here with a wealth of information, so we've come to the right place to ask any questions. Individual stocks and real estate. Buy and hold both. I still have stock and real estate that I bought in the late 90s. Gas money, healthy food and a sauna once in a while. How do you pick your stocks for long-term growth? Are there any key characteristics that you look for? I have always been interested in doing this, but technology scares me in some regards. With the rapid advancements in some fields, I feel that it is hard to predict long-term stability. He did a substantial AMA asked me anything on the Insider Forum. I doubt he will repeat the answer here. As anyone that's read my book, I don't use the stock market for wealth acceleration. I use it for capital deployment to effect a passive income. In other words, I use the market to generate income and liquidity. If I buy a stock, it's usually based upon speculation. I actually trade options more frequently than stocks. I have kind of dropped the ball on this. I just handed it over to JP Morgan to be managed. I have not realized any losses and I can see the account growing. I just have not really calculated any annualized percentages. At the moment I buy shares mostly from blue chips on different continents: Europe, US, Asia, South America, Russia, to cover a little bit of anything and avoid risks. Plus I have something in the major currencies if I need it someday. They should have nice dividends and a business that is easy enough for me to be understood. With a small piece of money I play with high-risk shares after they had a huge drop in price. So far it worked out pretty well. But I am with MJ that you should use shares and stock options only for generating some passive income and hold your money liquid. You can face huge drawbacks if you want to get rich trading. Rickson9, can you briefly explain how exactly you choose your long-term investments? The link provided by is only for insiders only and would really appreciate your insight and expertise. BRB, no buying a subscription. I mainly invest profits back into my current venture. However, I'm slowly accumulating silver because I think that it has a strong potential to rise in price. I've never experimented with the stock market, but would like to at some point during the upcoming year. By the worth it. Rickson9 told us exactly how he became a millionaire. And you wouldn't pay $30 for it? That is probably the least accurate statement I've seen in a long time. Stock trading or speculating, on one hand, is competitive. So does a professional chess champion, or golfer who makes millions, provide utility to society. It's debatable, but if you are the best at something that a lot of people compete in, You deserve to be paid. Secondly, speculators play a massively important role in society. Every farmer, or commodity producer or commodity consuming company, almost any company that actually produces a physical product, uses speculation and hedging to stabilize their earnings and expenses. If traders didn't provide liquidity, this would not be possible, and to put it bluntly, the economy would collapse. While it is a little bit more abstract in the case of stocks and bonds, the principle is the same. Speculation is an essential part of the economy and society, and countries that have tried to control it or limit it have gone straight to ruin. Buying new properties would be a good investment. It could be a house, land, or another business. Others would invest with furniture or jewelries. Some just put it in their bank accounts. It's all up to you and how much money you want invested. Gold and some other metals lying around, stocks, and stuff. Interested in direct investments in startups for equity but haven't really been actively looking. Does anyone here invest in tangible items, such as cars, graded coins, collectibles, artwork, antiques, etc.? I buy or sell a decent amount on eBay and tend to take some of the profits I make and invest in key comics. The comic industry has exploded in the past few years and has gone mainstream. I tend to pile money back into the business to grow my cash that way. I don't trust other people with my money, so I don't invest in the stock market, as I have no control over the businesses I have stocks in. Other than that, it's property where my pension funds sit, each their own. So because someone is the best at bullshitting or begging, they deserve to be paid? That's the least accurate statement I've seen in a long time. You sound more like a union employee than an entrepreneur. Thank you for explaining speculation and hedging to me. I was completely unaware of these terms or their existence. In all seriousness, the stock market allows for companies to fund and raise money for growth and development without having to give any control up of their company. It's the original source of crowdfunding. IPOs, or events where companies sell shares, are moments where you are providing the company with an investment. Its investment to you is entirely speculatory. Cushion zero. I'll sit down at a baccarat table and pull out a larger return on my investment than I will ever make in the stocks. Then I'll get up and go home. Most people can't do that though, win and go home at the right time. I'll get involved in stocks at some point. But I learned a lot about investing from the cushion zero. I learned all about hedging, stop losses, etc. The problem is that it's so risky and you can't do it from home in the US. I've put my 80% more of my money into stock. Stock is the best investment in the world. We have Warren Buffett as an example. My target is 30% a year, and I'm currently about 28% this year. I live in Indonesia now, so it's easier to find company that grows 30% per year. And there are a lot more that grows 20%. When I say 20%, that means on average they grow 20% in 5 years. Warren Buffett is a true investor. If you use him as an example, you would be investing your money in people, ideas, and businesses rather than the stock market. Haha. LOL. Poor example and an apples to oranges comparison. Warren Buffett invests in stocks that or assert policy. He isn't on his E-Trade account buying stocks. Carl Icahn does the same thing. These billionaire stock investors all share a common investment strategy: get control where influence can be asserted via large share ownership, voting blocks, and seats on the board of directors. In other words, they seek to influence company policy to their wishes to affect shareholder value. Can you do that commandment of control anyone? When you light up your E-Trade account and buy a stock, you have no control. No influence. No decision-making power. I wouldn't call your shareholder voting power particularly influential, sorry, but when you invest in a stock, determining when to buy or sell is the only control you have. He also has the power to influence government and taxpayers in his favor. Buy company, tell everyone the world will collapse if company does not receive a bailout, company gets billions profit. MJ, not all Buffett strategy we can use. He can buy cheap company in order to liquidate it. Buying company which is worth 10 and sell it for 15. I don't use that strategy. You can't follow all his strategy. I'm not investing in stocks, but in business. business that is proved to grow in the past. This does not mean they will keep growing in the future. When buying business, that means you are not buying stock today and sell it tomorrow. A lot of people do day trading and think they are already investing in stock. For me, they are not investing, they are just trading. You don't need to have control of a company. There are many strategies that Buffett use. There is a strategy that needs to have control of the company so you can liquidate it. And there is strategy that you don't need to have control. The company's already run by itself, or it has a great management, a great CEO. When I buy a stock, that means I trust the management to grow business. I don't need any control. BTW, I don't trade stocks. I invest in it, meaning I don't buy it this week and sell it next month. I have stock that is currently gaining 90% and have stock that is losing 20%. Both are still open. Currently my portfolio has gained 28% this year. The only reason I sell if I found another better stock or the company's fundamental has changed. Sorry man, my comment was rude. You had every reason to go off on me. Hope you'll accept my apology. The key element that people don't know about Buffett is that his initial wealth growth was from using the cash in an insurance company he bought early on in his career. He used the cash flows and surplus money generated to invest or buy other companies. True, but although we don't have the cash flows, we can still use his strategy. When my money is still small, I can use my salary as the cash flow. Most of my salary goes to stock. And when the portfolio is getting bigger, you need another strategy. Using cash flow from our own business and switching between expensive stocks to cheaper stocks. Even if it sounds funny, but I think that is the most clever way to invest money. All the other stuff is way too insecure for me to invest in. I chose not to gamble in the stock market through traditional stock buying practices. Instead, I chose to make the market by utilizing and selling covered calls. That way it doesn't matter to me if the stock market goes up or down. I'm still making an income and average between 3 to 6% a month. I started with my $60,000 severance package last year and was just rolling the income back into the account. In less than 2 years I've now got $107,000 sitting in the account paying me a min 3% a month, so I can focus on finding a fast lane now and not have to worry too much about outside income. I invest in real estate and various side ventures and also trade the market, primarily via ETFs. While I hate to gamble in a casino, I have no trouble playing the double and triple levered ETF market. In a casino I know with mathematical certainty that I will lose over the long run, but with the market at least I can apply logic and brain power to place bets with likely positive F. I've been working a pretty cool side project with some friends for the past several months that has the potential to be pretty huge. It's a mineral lease deal. We'll probably start a thread to discuss before long. Wish I could make B&P again this year, as it would make a good presentation, but doesn't look like that'll happen. We'll miss you crazy kids. And the Scottsdale Cougars, not to mention that Warren Buffett is one of the most successful entrepreneurs in the world.
He generated all of the money he has to date to invest through businesses, his first investment company similar to a modern-day hedge fund, and his insurance company.
How do you determine good candidates to write covered calls on? How many contracts per month are in play? What % of the capital each month? Thanks for any insights.
That's amazing. Will that work when your money is getting bigger? 1
All
million?
the above, plus lending club to mix it up a bit and have some
It
fun.
varies. I try to keep 3 different companies in play each month, third of the capital for each purchase, ensuring that they are not in the same industry while avoiding some industries. Keeping the stock price above $20, so depending on the price I'll have 5 contracts or even 8 contracts.
Each month is different and depends how much I want to keep in cash, etc., and check the markets for 2 minutes at the end of each day. Pretty simple. Why not? Just larger purchases and more contracts. Possibly more diversity in companies so as not to influence the mindset of the gambling 95% chasing the volume. Thanks. I was going to ask the same question as Rickson. I recently started writing covered calls and I'll be using it as a stream of income once I finally quit my job. Do you have any way to screen for stocks to find good candidates, or do you just go looking?
Seems like a great way to bring in income if you can avoid a large drop, which will probably happen every so often, and if it hits your strike you end up with income and some cap gains.
Price drops are irrelevant. The exercise price is usually in the money and pretty tight with the market price. That way I can increase income from the intrinsic value along with the remaining time value of the call.
I write them usually no more than 21 to 30 days before the exercise date, tops, and never the first week after the third Friday of the month.
How are they irrelevant?
Do you write deep in the money calls? I don't see them yielding
This is
much.
the problem I see with writing covered calls: capped upside, unlimited downside. Sure, you still get the income, but a drop below the premium you've been given still puts you in the red.
I've been trying to think what the best strategy would be in this case, but the severity of the drop would determine that, I guess. If I sell a $10 call on a 9.90 stock for 0.50 or whatever and the stock drops to $8.70 or so, I could probably keep selling $10 calls for decent income until it moves up or while it stagnates. If the stock drops down to $6, what is the plan of action?
$10 calls won't yield much premium, and if you're writing calls below that without getting into exact numbers here, your shares could possibly get called away for less than you originally paid and earned from the initial purchase and write premiums. Thanks ahead of time for your response.
My initial analysis seems too good to be true, and I know an inevitable significant drop could wipe out a lot of gains. I was talking to a friend about this today and I sent him this, running some numbers on options and selling calls, and this may be what gets me back to Thailand full-time.
Just looking at Nokia, for example, $4 strike with the price sitting at 3.99 brings in 0.27 or $27 per call. Without accounting for commissions, you can make $1,350 by selling 50 calls or 5,000 shares. So $20,000 brings in $1,350 in income.
$100,000 brings in $6,750 per month, or in even less than a month. Expiration is Jan 19th.
Of course, this doesn't account for volatility on the downside, but that's still an awesome return. 6.75% a month or 81% a year. The problem with a stock like NOK is it runs up and drops fast.
You cap your upside to capture the premium, but the downside still exists. The boring stocks don't seem to yield much in premium. Maybe I just need to keep looking.
If anyone else reading this thread is as lost as I was, here is a nice article about covered calls.
There is no such thing as a free lunch in the stock markets, so just because someone goes on a forum and makes it
Don't
sound
believe
easy.
it. This strategy requires knowledge and skill to make it work. Market timing is definitely a large part of this method. I think a $4 stock is bad candidate as it's naturally going to be more volatile.
Since this method first come up a few days ago, I had the same
It was a golden strategy, but I've been studying it extensively since then, and you still need to be able to trade well to do well with this system over time.
It works best in sideways or oscillating markets. This is an important point. Think about how you can use a put to protect the downside. It will reduce the return, but cap the risk. Otherwise the risk or return is inviting disaster.
I've been reading about it for the past month or so, and I've sold a few calls. I use NOK as an example with my friend because we're both invested in the company. Low volatility doesn't award much premium.
Low volatility without of the money calls plus a dividend could yield a decent return, but probably not 3% a minus.Is.
Very true. The core of being successful in options is understanding one's method for choosing the underlying stock in the first place.
Once a method for selecting a stock is understood backwards and forwards, it becomes more effective to incorporate options around the
John Lee is
method.
absolutely
I apologize
correct.
that I've made it appear easy. My first year was a little stressful until I found a strategy that was consistent.
If you do something without knowing how it works, the only one to blame for failure is your own ego. Emo. I stay with stocks whose price is above $20 for the very fact of volatility. It's been trending up for over the last 6 months. The 50-day SMA is above the 200-day SMA. No auto, banking, drug, or Chinese companies.
Oh, institutional investors hold 10% plus of the stock. Let them do the extensive research. Notes: no one system works 100% of the time. You must stick to your system even when you believe it has let you down. Thoughts come
Emotion
first.
second. Just like with the fast lane, discipline is learnt. This must be maintained as practice makes permanent. The market punishes those who are undisciplined. This is the only real work element. If I'm not 100% certain, I'll use a protective put. This limits the income but has saved me more than once.
Champagne, Coke and girls. I invest my cash in
What
pleasure.
about utilizing a stop loss as a way to cap your downside potential, or possibly buying back your rolled call and selling another as a way to minimize
This is
the loss?
assuming that the company you are writing on has not completely broken down.
I have a guy that does it for me. I am an entrepreneur, not an investor. I read the Wall Street Journal every day so I am not totally lost. I do want to pick up some investing books just to learn about it.
I use option selling as my main stock income strategy. Mostly weekly covered calls or 3-month iron condors. Then to hedge the whole thing, I buy on VXX calls.
Just so everyone understands, selling covered calls buy stock or sell calls is the exact same thing as just flat out selling puts on the company.
The risk reward is exactly the same.
Unless you're also collecting a dividend on the company stock you bought. I somewhat cringe when someone alludes that covered calls are safe. They're exactly the same as writing puts in terms of risk or reward. They both are neutral to bullish, and both take advantage of time decay. Here's the risk-reward chart for both strategies. I'd post both charts, but why bother?
They're exactly the same. The only way I'll sell covered calls is if I'm in a dividend stock that I'm holding for the long haul.
For example, Southern Company, that way I collect dividend and call premium. Otherwise, if I'm neutral to bullish, I believe selling or writing puts are the better play.
I'm a big fan of selling puts, but the weeklies often don't make sense unless you are very good at technical analysis. It comes down to how far out you can get and still maintain an acceptable yield.
So typically selling puts works better on a 2 to 3 month time frame, and selling covered calls works better on a weekly time frame. I sell puts when I want to be a shareholder, but the price is just a tad high. I'll keep collecting the premium until it drops to a price where I am put the stock.
For example, purchased a few $1 million of American Eagle in 2009 when it was around $12 per share. The Schottenstein family owns about 26.5% of American Eagle and Jay himself owns about 3%.
Since I like owner-operated businesses, I started writing puts on American Eagle at $12 per share. After collecting premium for a while, I was eventually put the stock.
In that particular case, I got the stock at the same price as J. If I want to unwind a position, I will write calls until I am called away.
If anyone wants to learn more about covered call or naked put strategies for generating income, I'd recommend checking out Rongrowing's website and software. I like his software, and I've met Ron. He's a fin man. RL.
This X2.
Love the concept, but still quite the new guy in that area. Where would you suggest I look to educate myself on this? Or, would you happily take someone like me under your wing?
Buy and
Thanks.
hold stocks. US only. Currently have 6 companies in portfolio. If that's what you're asking, you know there is a difference between investing and trading speculating. I invest my money in stocks that provide a deep value opportunity, in fairly concentrated positions. I completely ignore bullshit hype that most retail investors flock to without
Everyone's
thinking.
buying unprofitable 3D printer companies with no revenue? I'm happy to sit that out. I buy things that people are afraid to buy, which is why they're greater than 50% cheaper than they should be.
I keep a decent pile of cash on the side to use when others are fearful, which presents opportunities. People aren't fearful right now, which is why I've got more cash sitting around than usual.
But these things work in cycles, so patience is key. At the end of the day, it's more about mental fortitude than analytical accuracy.
I'm doing my homework but benefiting from others' emotions as much as anything else. My job is as an analyst in a billion-dollar fund that makes being that aggressive more difficult, which is why I pursue deep value with my own money instead.